Hi everyone, Nadir here from BDO. I'm a member of the Specialized Valuation and Credit Group, and we'll be spending some time today talking about the property sector and how credit spreads have changed. We all know that 2020 wasn't great for property. The listed property sector was down 33% in value, mainly due to general business struggle and increased unemployment rates caused by the global pandemic and the resultant lockdown. I'm joined by Nicholas, who will help us summarize some of the interesting points of note within the property sector.
Hi Nora, thanks for having me. Yeah, that 33% loss in value is not surprising in the least. An interesting impact within the listed property sector is that REITs, who traditionally paid a stable dividend, held back on these dividends in order to have the cash on hand, evidenced by Redefined Property, one of the largest property companies based in South Africa. They announced that they would not be paying their dividend for the year ending August 2020. The JSE is, however, putting pressure on them to return to a regular payout. In addition, the All Property Index, an index tracking listed property companies, including those dual listed, also saw a reduction of 40% in market value, whilst the SAPI, the South African Property Index, an index concentrated on the largest listed companies in the property space locally, suffered a loss of about 35%.
Interesting points, Nick. So looking at the bonds, traditionally, longer term bonds have higher spreads than short term bonds. And as a bond approaches maturity, the spreads traditionally decrease. This link between the time to maturity and the risk of default held true within the property sector. When looking at the average credit spread in the property sector for all traded instruments and for all maturity levels, I found it quite surprising that the credit spread remained reasonably stable around 200 basis points more than the risk-free return. In analyzing the spreads, we took the average of all instruments by the JSE mark-to-market report that were issued by property-related companies. We further segmented these instruments based on the maturity dates into short, medium, and long-term buckets in order to perform a more meaningful analysis. We have noticed that on average, for instruments maturing before December 2022, the credit spread remained stable throughout 2020, indicating that the market did not perceive any major change in the risk of default on short-term instruments. A handful of instruments maturing before December 2024 experienced a significant increase in credit spread, which caused the average spread to increase over the 2020 period. This indicates to us that the perceived riskiness of a medium-term instrument has increased, and that investors demand more return to take on this additional risk. The long-term instruments maturing post-2024 were just like the short-term instruments, where the credit spread remained reasonably stable. This indicates that the increased perceived risk that we noted for medium-term instruments is not expected to remain relevant into the longer term. Investors consider recovery of the economy to ensure growth in the sector and on these longer-term instruments, hence no significant spread movement.
Seems to be that investors aren't too concerned about the risk in the short term. This is likely due to early cancellation clauses, having sufficient cash reserves, room on their balance sheets, and in worst case scenarios would be the selling off of dormant low yield assets. In the long term, investors seem to be optimistic about the ability of the property sector to respond to these challenges. But in the medium term is where the risk lies, since they aren't sure if people will return to the rental market or if they will remain at home. It's going to be interesting keeping an eye on the credit spreads going forward to see if this long-term optimism remains or if the medium-term perceived risk will flow over. That's it from us today, folks. Should you require any further information from the BDO Specialized Valuations and Credit Group, please feel free to contact us per the below.